If you're thinking about purchasing a home, congratulations, and congratulations to me because I just bought a new home. And during this process, I learned a lot. And there are some highs and lows to the home purchasing process. And I want to make sure that you can get through all of this with the least amount of stress possible. I'm going to give you my best practices to purchasing a home in 2024. And you want to make sure that you stay to the end of the video because your girl's going to be a little transparent with you about one mistake that I made, and I will teach you how to avoid it. Hello again, and welcome back to my channel. I am Dr. Brittany Halford, your internal medicine physician and wealth coach. And here on this channel, I teach you how to optimize your finances for joy and fulfillment in your life. And today, we're going to talk about something that we use, that we live in, that we sleep in every single day, and that is your home and how to prepare yourself for the home purchasing journey. Now, we just closed on a home recently in June in 2024, and this is actually our second home. So you would think that your girl would have learned something from the first home purchase, and I did, but I still made some mistakes this time around, and I want to make sure that I can help you to avoid making those home purchasing mistakes and make sure that you are the best candidate for the home purchase. Now wait, before you go searching for your new home on Zillow or the MLS, you want to make sure that there's some things that you do to get your finances in order. And honestly, this is the most important step that you can take to ensure a smooth home purchase process. Now, if you are a woman in healthcare, then your life has likely been very busy and you may not be paying attention to some of the fine details of your finances. But trust me, that bank that you go and ask for a mortgage from, they're gonna be looking at the details. Like, literally, I'm like, really? Do you need to have every single credit card, every single bank account, every single retirement account? And they're like, yes, Dr. Halford, we do. So please send that over ASAP. When you are preparing for a home, you want to make sure that you have all of your financial information, and you want to make sure that you know your numbers before you present that information to the bank. So the first thing that you need to know is your income. It's so easy for us to go around just earning and spending money without actually knowing how much we're bringing home. But the bank wants to verify your income, not just for one single year, but verify your income for 2+ years, especially if you've had any transition in roles. This is not the time to be changing jobs because they will want to know what is the information from your past employer and from this employer, and to ensure that you have stability of your income. Now, when we were purchasing our home, we live in the state of Massachusetts, which is very expensive. And they wanted to verify that we had substantial income. If you are a person who is not W-2 and say you are an entrepreneur, you just started your business, or you are a 1099 income, they want to verify that you have stable income for the past 2 years. A couple of ways that they verify your income is not only looking at your last 2 pay stubs, looking at your end of year pay stub from past employers, they also ask for the last 2 years of your tax return. Yep, they get all of the information and all of your business. So if you are thinking that, okay, I want to purchase a home in the next 6 months, in the next 3 months, in the next year, then you want to start to understand, okay, have I had transitions in employment? Have I had any periods in which I was unemployed? Because that's going to raise red flags to the bank. And what is my income for the past 2 years? Not only do they want to know that you've had income, they want to know the sources of your income. So if you are a 1099, you have to start to gather all of those paychecks from all of your employers, especially if you're like a travel nurse or you do a lot of moonlighting and you want to include that income to verify the amount of income for your home purchase. You also want to make sure that you can explain any changes in your income. So one of the questions that the bank asked me is that in the prior year, I worked a little bit less. That was because, you know, we had children and things were changing in our lives, and so that I cut down on my time. I had to explain that as a hospitalist, I can pick up shifts, I can decrease my workload as I please, and this is the income projected for future years. So making sure that you have verification of your past income and that you can explain any gaps or shifts in your income. Now let's talk about your credit score. For many individuals, this credit score is something that we hold on to kind of like a badge of honor. I know I did for forever. And if you haven't watched my video about how to maintain and achieve an 800+ credit score, then watch this video right here where I break it all down for you. But they want to know, what is your credit score? They want to understand how reliable of a borrower will you be. If they were to loan you money, what is the likelihood that you would default on that loan? And one of the ways that they predict that is by looking at your credit score. So if you go to a bank and you say, I am interested in a pre-approval, and we'll talk about that whole process in a later video, but you say that I'm interested in a pre-approval, the first thing they're going to say is it okay for me to pull your credit? And they might say that this is a soft pull versus a hard pull. A soft pull is not going to have any impact on your credit score. A hard pull will have an impact on your credit score. So if you're talking to the banks about their process, you want to ask them specifically, is this going to be a soft pull or is this going to be a hard inquiry or a hard pull, so that you can understand what will be the impact on your credit score. The one thing that you don't want to do is to have these large fluctuations of your credit score during this home purchasing process. You want to show that you are stable from an income perspective and you are stable from a credit score perspective that shows that you are able to manage credit very well without you increasing your risk for default. When they check your credit score, you will see that you will get information from 3 of the credit bureaus: TransUnion, Equifax, and Experian. And you might see that there are going to be some differences in those numbers. And I don't know which bank might look more at one credit bureau versus the next. That could be a question that you ask the banks when you are doing your interviewing of banks and determining which one you might want to work with for your mortgage. And remember, the higher the credit score, the better the interest rate you are going to get. Literally, by 1% of an increase in an interest rate can increase your mortgage payment by $300 to $1,000. So you really want to make yourself the best candidate to get the lowest interest rate when you're purchasing a home. If you have not checked your credit score recently, you can go to annualcreditreport.com and pull your own credit report from each of the 3 bureaus. Make sure you go through it with a fine comb, especially if you do not have the top tier credit score, 700 or above, really 750 or above, but you know. If you find that there are any discrepancies, you want to dispute those so that you can boost your credit score before you actually present yourself to the bank. Now, if you're like, okay, Brittany, I'm not there yet, but I want to be there in 12 months. And you pull your credit report and you don't know what to do, then I have a whole video of me going line by line through my credit report and explaining some of the nuances. And you can watch that video right here. All right, so now you have a stable income, you got that credit score and it's 750 and higher, so you've improved your ability to purchase a home. Now the thing that you want to look for is your debt profile. Your debt profile is very important to banks because they want to understand, how are you living? Are you living above your means? Are you living under your means? If something were to happen, would you be able to afford continuing to pay your mortgage year after year in the setting of changes in the economic climate? So this is really important, and really your debt to income ratio is going to impact your ability to get a home loan. Your debt to income ratio basically is an evaluation of how much you have in debt. So that means mortgages, credit card debt, personal loan debt, car loan debt, and dividing that by your income. That gives the bank a ratio to understand how leveraged you are. Most banks prefer that you have a debt to income ratio of about 30% or below. And if you are a healthcare professional, now you might be thinking, like, really? Your girl got a lot of student loans. And honestly, many healthcare professionals do have student loans. And in our case, this is one of the benefits of us using a physician loan. Now, let me take that back, because when we purchased our first home in 2022, we had already paid off all of our student loan debt. So student loans were not really a factor in the equation of us and purchasing this home. But for many healthcare professionals, I understand that it is. This is a question for you to ask the banks: is how are your student loans going to be factored into this debt equation? Student loans definitely will impact your debt to income ratio. They also can impact your cash flow, because you have to incorporate that student loan payment into the amount that remains at the end of the month in order to understand if you can afford a mortgage payment that might be greater than your current rent or your current mortgage payment. And student loans can impact your credit score if there are any defaults on your student loans and things of that nature. So it's really important that you talk to the banks about your student loan profile and understand how they're going to incorporate that information. There are some physician loans and nurse loans that are not going to weigh your student loans as heavily, and so it might be prudent to look into other mortgage products so that you can understand the differences of each of those products. Now let's talk about another large sum of money that you need to have before you purchase that home, and that is an emergency fund. You should have a robust emergency fund before you purchase your first home or even your second home. Here's the reason why, and this is from real life experience. When you purchase a home, even after you get your appraisal and your inspection of the home, there are undoubtedly going to be some things that the inspector did not detect and you will have to fix. In my personal experience, we had to fix our hot water heater system, and yeah, at some point we were boiling water for about 2 weeks. Nonetheless, you will likely have to fix something in that home. You can't just call the landlord and say, hey, my toilet's broken, hey, this pipe burst, etc. So you want to make sure that you have a robust emergency fund that allows you to bear some of the throes of home ownership and not put you in debt or sacrifice any of your other financial goals in order to pay off those expenses. In addition to your emergency fund, you also need to have a house fund. You need to have a large sum of money that you are going to use for a down payment. And really, the larger the down payment, the lower your interest rate will be because the risk on the loan is going to be less. If you ask to borrow money from me and you're like, oh, Brittany, may I borrow $100? Sure, I got $100. I can give you that money and no thought, right? But if you say, Brittany, may I borrow $100,000? I might need for you to put down something to give me some type of leverage just in case you default on that loan. And that is effectively what your down payment is. It provides some assurance for your loan. So you can put anywhere from a 3.5% in an FHA loan to 20% in a traditional conventional loan. Now, if you are like me, a healthcare professional, you might want to inquire about banks who offer physician loans or nurses loans or even loans within your institution that can help you to offset some of that large down payment. In our case, when we were shopping between banks, and I'm going to talk about a lot of the documents and all the things that we had to provide and the conversation with each of these banks, but one of the things that differed between the banks was the amount of down payment that we were required to put down in order to secure that loan. And whenever you're putting down a chunk of money, you have to think about what are the opportunity costs of other things that I could be doing with this money. This goes into the lifelong debate of whether it's best to purchase a home versus renting a home. And we're not going to get into all of that conversation today, but we will discuss that in a future video. Nonetheless, having a decent amount of money put away for your home purchase will work to your advantage. Even if you find a product or a bank that offers a lower down payment, it affords you the ability to have different options. One, and if you have extra money, that additional money can go towards either funding your emergency fund or furnishing your home. And one of the things, in addition to understanding your credit score, making sure that you have a stable income, saving for your emergency fund, and also making sure you have an appropriately sized down payment, another thing that you might want to do is to actually freeze your credit so that no one else can open up any new lines of credit, no personal loans, no credit cards, or anything like that. Because during this process, you're going to have to submit documentation for every single thing, and they're going to inquire about why you are doing certain things with your money. So in all transparency, we submitted our application to the bank, we submitted all of our documentation, and our loan was finally approved by the underwriter. And once I got that approval, I'm like, okay, this is an opportunity for me to open up a new credit card, because if you don't already know, I have been leveraging credit card points to save up for travel for our family. And with a new home purchase, there are a lot of expenses. We have to hire movers. You have to have somebody professionally clean the home that you're moving into or the home that you're moving out of, if you choose to have it professionally cleaned. You might need to buy additional furniture pieces. You have to buy boxes and tape and all of these things. So I thought that this is an opportunity for me to get a sign-on bonus with a new credit card. And I opened up a credit card. I got that approval letter, got that approval email. Your girl opened up a new credit card. And as we approach closing, they do another evaluation of your credit score just to make sure there's nothing else that has changed. They review your credit profile. Now, this depends on how close you are to finding your home, submitting the application, and the closing date on your new home. It's closing day today. Oh my goodness. I am so excited for this new chapter of our lives, and it's gonna be so good. We had an extended close, so they did 2 evaluations, and I had to submit additional documentation from my bank account showing that the bank statement from the credit card and showing the bank transaction of where I paid the credit card. So I needed to submit additional documentation after having our loan approved as we approached closing, because I had opened up this credit card. And thereafter, I sent a message to my husband like, oh, don't open up that other credit card that I told you to open. And we had to wait to open the other credit card accounts and postpone some of the other expenses that we wanted to put on them in order to achieve the sign-on bonus. So there you have it. These are some of the things that you can start doing today to make sure that you are the best candidate to purchase a home. And I want you to hit subscribe, because in the next video, I'm going to give you a checklist of all of the documents like every single document that, my gosh, they asked me for so many different documents that you will need, and you can make sure that you can ease the burden and decrease your stress during this home purchasing process. Well, congratulations on your future home purchase, and I can't wait to see you in the next video. Bye-bye.